What's up, guys? It's December 18th, 2023. Do a breakdown of the Emini. Pretty good day for the Bulls again. They just keep on chugging. It's been a couple months now. However, the close wasn't the best. Bears kept the close below the EMA and below last week's high, so on bigger time frames, this could already be looking like a failed breakout. Maybe around here is the high of one bar, and then the second bar starts to reverse. Yesterday's price action was range bound with a little more bullish sense. I mean, it was just range bound, and it was an inside day. We don't get those too often. See, the first 6 bars of the day was range bound, leg 1, leg 2, leg 3. Range, leg 1, leg 2. Range, exhaustions on both sides. Climax, exhaustion, whatever you like to call it. It was a sell vacuum up into the high. I think bulls were stuck up here. They were buying lower. Today was a pretty good day for the Bulls. First bar of the day, excuse me, just gonna fix my chair. Alright, first we have a gap up, and we know I'm gonna just keep repeating it until it's like ingrained in our heads. This could be seen as a bull bar. First bar of the day is continuation, however, it's a range bar, not a trend bar. Why? Yeah, so bar 1's a range bar. It's not a trend bar, but it does have a bull body. Bar 2 is follow through, and they're starting to become a channel. However, bar 3 breaks the channel, and bulls fade the first channel break into new highs, or into recent highs, excuse me. Bar 4 is, I think this is the fade I was just talking about when the reversal came in. Bulls bought the new low and got out here. Bar 5 shows us in a bear micro channel, and bar 6 breaks that. This breaks the micro channel I'm looking at for the bears are right here. It's broad and tight, but we can see 2, 3 pushes down on smaller time frames. The smaller time frame push down is 1, 2, 3, creating a wedge bottom bull flag, and then bulls get a new channel, very steep, and just how we had before. Why did those dots stay? Just how we had before, right here, when the channel line broke, and bulls faded that back up to channel highs. Pretty nice trades. I didn't take any of them. I'm doing a lot more just sitting and watching now. I think my bread and butter is going to be taking 5 points and just watching price action unfold, and it has been working out. I don't like to talk about psychology too much because I don't really believe in it when it comes to trading, but just from not always hunting for a perfect trade, not hunting for a 10-point swing, it feels nice. So we got leg 1, leg 2, leg 3. Leg 3 starts to fail, and bears get their deep pullback. Here we can see 3 legs down as well. I'm really trying to start to pay close attention to this. That came out so wrong. I'm trying to start to pay more attention to the story. So this is a breakout bar, because look at this range. However, we have to wait for follow through, and this isn't good follow through, but it's the minimum bears need, and the minimum bears need is not a bull body. Breakout against about 30-40 minutes of buying with a huge gap up. I don't think it's the best sell, but bears get leg 1, leg 2, and then they come up. So within this leg, it goes down, comes up, and they get their leg 3. Leg 1, leg 2, leg 3. It's a wedge bottom, steep channel. You start to see how these channels are everywhere. There's a channel right there for the bears, and then this bar breaks the channel. The market's always transitioning, so what may be the first bar in a new channel could be the last bar in the previous channel. What I mean by that is, let's say, I'm just doing this to draw the picture better. That is actually a bear channel. I'm gonna delete this. I'm gonna delete these lines so we know what we're talking about. So this is a steep channel, and it gets faded. And then you could say, well, over here I was saying the first trend channel line that breaks fades back to recent lows. And you'd be like, well, why doesn't that happen here? Maybe I go short for a quick scalp. The answer is because I think there's more bullish momentum. With this gap up and continuation, this could be somewhat of a double bottom bull flag right here overall. So a larger pattern within these smaller patterns is being made. And this is the first touch of the EMA after been trending away. So this is the first traders who are trapped out the market get a chance to buy. And that's not always the case. We have to see strong buying on the side for us to come to this conclusion. However, these bars tell us that they were ready to buy. Back to the channel line. This is the channel line, and this bar ends the bear channel right here. However, this bar is also the start of the new channel for the bulls. And then if we make a really steep do you see how the bulls are able to fade, but the bears can't really fade? Bears are not making money, so we're above the EMA. We've been above the EMA. We're above the hourly time frame EMA. We're above yesterday's high. We're starting to break out of last week's high, so I don't think it's good to go short right now because if you can catch this short, okay, but are you going to get long right away? Because there's a lot more bullish momentum. There's a bull flag we see right here, double bottom bull flag, steep trend channel line. First break gets faded back to recent highs, and then the market starts to consolidate above last week's high. Last week high. I didn't like to type out the whole thing. I think it looks a little bit cleaner with less words. The bulls get another bull flag, and bear pressure is shrinking. Maybe some people went short, and if you did, you have to respect this bar and get out because you're going to get shredded going short here. If you were to get short, it would be something like this because the bears have started to make money here. Maybe you could even scalp that bar, but that means you have to get short here or have a limit there. I don't think shorts are good right now. Strong breakout. The bars are getting bigger, bigger, and bigger. I actually bought this bar and went for 5 points. I got filled right here. You could wait to see if this bar gets continuation because we are breaking out of a range, but I was already looking at this as a second leg, so I wanted to be a part of it. So leg one, leg two, leg one, leg two, and then I'm trying to avoid the leg threes, fours, and whatnots. I'm trying to focus on getting repeatable trades. So leg threes and fours, we are always told in the trade room not to trade them. Here's that bull flag, and it gets a breakout. Let's see if we can get a leg one, leg two going. Can't really get a leg one, leg two going. It doesn't meet it from the bottom of this bar to the top of that bar, but I do want to check one thing here. I didn't do this while I was trading because I'm just going for 5-point targets, so I'm kind of looking like, so if I went like this, I'd be like, okay, yeah, I have the opportunity to make 5 points within this range. Where previously I would try and make every point I can, and that always gets me holding a trade too long, and the trade turns around. So we'll see how it goes. I just wanted to measure this breakout here. It's a little more accurate. Do you guys see where I measured? Let me delete that. I measured the gap up, the top, I guess, what about right there? No. Yeah, so from the gap up to the top of bar 2, the wick gives us a good PT. And that is a measured move of the gap up with follow through before the pullback. So I'm actually reading this as one bar like that, if that makes sense. From there to there, kind of. And even if we were to pull it a little bit longer, I'm going to delete that so you guys can see where I'm pulling from. Let's see. No, it's not met there. It is met there. I think just measuring the straight up gap would be the safe bet. And it is met, and this bar did accelerate. I remember watching it. And these were slowly chugging, and then this accelerated. That could be a temporary sign of exhaustion. And after that, we can see we can go leg one, leg two, leg one, leg two, and this starts to be the third leg, and you can see how it's harder to trade. It's more range bound. Bears get 3 legs into the EMA, and I'm counting them like this. 1, 2, 3. Tries to sell lower, fade the channel. Remember, this is a tight channel. First fade, first channel line break, fade right into the EMA. That's 3 legs to me. See? Bear channels eventually have a bull breakout. Bull channels eventually have a bear breakout. And that's not to say like the same day. That could be across multiple days, depending on what time frame you guys are trading. Price action is fractal, so even if you trade smaller time frames, which I don't recommend, I think the 5-minute tells us everything we need to see. We can see everything on the 5-minute, and you get smaller time frames, the signals become less trustworthy. This is a good trade here. Usually after the market's been trending for 20 bars or 2 hours to the left, you can buy the first pullback into the EMA. I didn't buy it because I'm just not trying to get involved in any third or fourth flags. But this is in the Brooks course. If you guys are taking the course, check it out. If you're not, check it out. It's good. It's worth it. Buy the EMA and you go back. You hold first target here is the recent highs, and then next target is a new high. However, we're late in the day, and the later the day goes, the less of a chance we have to make a new high. This was also an exhaustion move, and it immediately reversed. So now we have two reversals: an exhaustion, 2-bar reversal, 2-bar reversal. Definitely can say we're in a range. Here is a bear flag that leads to 2 legs down, or you could say leg 1, leg 2. I was actually short here. I was thinking this could be like the start of bears making money, and then here would be a sell vacuum to test this area. I got trapped, and I was gonna sell this bar and get out here, but I'm trying to get in the habit of hitting out quickly at my entry price. I didn't short here, but I decided to get short, and I think I got filled at this level. So it wasn't too hard for me to get out because the market was just oscillating around that price. I am going to start practicing if I short here, get out here, and get out break even, because I think I can start doing that a little bit more. I'm starting to understand the right environment. Trending environment is bad. You would just hit out. Range bound environment is okay. Bulls and bears are making money, so this is a range bound environment. We can see a double top and a double bottom. So that's range bound environment. And then we can see the leg 1, leg 2 with the breakout. So that was met from leg 1 here, pull back leg 2, double top bear flag. My mouse is starting to slow down. It's slowly dying. And you know what's crazy? It always only slowly dies when I'm on this specific thing. Like, it's been fine all day, but now I'm doing the review. It's starting to die. Here's the bear flag. See? I did not do that. That was my mouse just moving. Here's the bear flag, double top bear flag, and it broke out. My mouse is starting to think on its own. The sticky stuff, something is, this, like the pad is messed up under it. It's moving on its own. That's so funny. Okay, hopefully, yeah, it's a little bit, it's lagging. Okay, so we'll go over to the bigger time frame. Bulls, yeah, pretty good day for the Bulls. Bulls had more than 3/4 of the day spent above the EMA, and about the last 30-40 minutes, bears closed below the EMA. The problem with this is it's a big close, and they're closing below last week's high. This would be a breakout level, and Bulls would definitely want to stay above it. Not maybe the bears pull back and we open up. Maybe they start to break down with this gap. Because I honestly, I thought something was up with the bull trend here. I was like, wow, double top, sell, and now we're at new highs again. So we'll see what happens. Maybe we get a pullback into the hourly EMA. Bigger time frame. I've added the weekly levels back. Last week's high, 50%. Last week's low. We can see that right here. And then we can see the failed breakout I was talking about through this wick. How we kind of trended up, and then we came down at the EOD. That's this wick. The open, the gap up is right here. The open, and then that's like the 5-minute chart right here, since it's on only Monday. Back to the daily. We can see the same thing. The candles look the same because it's the first day of the week. So Monday's candle is the weekly candle, and this is also Monday's candle. Looks like this is the overnight session, and it looks like they're trying to hold on to last week's high as an important level to stay bullish. Been steady buying. I thought we were going to pull back here. I thought we were going to pull back here. I'm not even going to talk about pullbacks anymore. Yeah, hourly chart, we can start to see some sort of double top wedge. Maybe we get another push, and that creates a wedge top. The market sees that and sells. This bar is starting to look menacing. This bar is not nice. The 50% pullback did sell on the hourly chart back to recent lows. If you're new here, I always measure from the body. I study Brook's price action. Hit the follow button. I drop these videos every day at 3 p.m. On Friday's video, it'll come out on Monday. I'm going to start to try and post videos on the weekend starting next year. I've been kind of stacking it so I can have some things to post with time to breathe. I hope you guys are learning and using your stop loss. I appreciate the comments. Keep studying. Tune into the live streams. Watch the daily breakdowns. Have a good day, guys. I'll talk to you tomorrow.